Okay, this problem, Culver City Lighting, asks us to prepare a classified balance sheet. They've made this kind of easy, but let's go through this step by step and make pretend we don't know nothing. First, we have to identify the current assets. And current assets I'll highlight in blue: cash, accounts receivable, inventory, prepaid insurance, and that's it. Now there could be any other receivables, could be loans from employees, there could be other receivables, but remember the order is CSRIP: cash, short-term securities, receivables, inventories, prepaids. So that's our current assets. And now we have to find our non-current assets, our long-term assets. And you need to remember that the tangible ones come before the intangible ones. So equipment is a long-term asset, and the accumulated depreciation associated with it is a long-term asset. So they go next, followed by our intangible assets. And again, you could have 3, 4, 5, 6, 7. So the theory will never change. You could just have more of each category. So the blue is the current, the pink is the fixed, and the yellow are the intangibles. So when we put those together, we come up with that piece of the problem. And that's the asset section of the balance sheet. Now we're going from a post-closing trial balance, and technically financial statements are prepared from the adjusted trial balance, but the balance sheet really prepares best from the post-closing trial balance because you've already adjusted retained earnings for the effects of operations. So we come up with that, and we now know for certain that when we're done, we have to come up with $302,000 worth of liabilities and equities. So let's go back and take a peek and see if we can come up with $302,000 worth of liabilities and equities. Well, just as we start with assets that are closest to cash, when we're dealing with payables, we start with the payables that will use our cash first. And in this case, accounts payable is first. And there could be several accounts payable. Now, if you had the current portion of mortgage payable, that traditionally is listed first, but you list them in the order that you're going to pay them. Accounts payable and interest payable are current. They're both now. Okay. And then we have this, the current portion of long-term debt, and the current portion of long-term debt, 10 equal installments, it's 10% of that, so that's $13,000. So that's our current liabilities. And then we have to look at our long-term liabilities, and we do have one. It's just not in the form you want to look at it at, but it's there. If we started with 130 and we've characterized 13 as current, the remaining 117 is long-term. So I'll highlight that in red. That's our long-term liabilities. And then we have our shareholders' equity, we have common stock, and we have retained earnings. And I'll highlight those in yellow because I'm running out of colors. So now we need to put those in order. So we'll start with our current portion, our current liabilities, excuse me, and it will look like that. We will have our accounts payable, $13,500, interest payable, $3,500, current portion of long-term debt. That's how much we have to pay this year. That's $13,000. So our total current liabilities are $30,000. Our note payable, that's that piece over there in pink, the piece that's left over after we recognize or recategorize the 13. And then we have common stock and retained earnings that we picked up from the closed trial balance. And indeed, it does balance at $302,000.